Over the last 9 months, gold has rallied by $600 per ounce, 33% in only 9 months. Repeatedly over that time, prices have jumped on news or speculation that inflation was falling or that the Federal Reserve would soon cut interest rates. That pattern was repeated again on Thursday when the Commerce Department reported that consumer prices in June actually fell from the previous month, and that the annual inflation rate had dropped to 3%. This good news was reinforced by dovish statements about interest rates from Fed Chairman Powell. In reply, market sentiment shifted with conviction that the Fed would cut rates by September. Gold immediately added $40 on the news. This rally is different from any other I've seen in my lifetime. The previous ones had been speculative spikes driven entirely by bad news, high inflation, rapidly rising interest rates, financial crisis. These rallies came fast and furious, then subsided. The present rally, however, has been driven by a mix of good news and bad news, not just bad news. Good news on inflation and interest rates. Bad news related to political instability and geopolitical conflict. And this rally has endured. In an extraordinary run over the last 5 years, gold has established a series of new price floors. First, $1,500 per ounce in 2019, then $1,700 per ounce in 2021. $1,900 and $2,000 an ounce in 2023, and back in March, $2,300 per ounce. Now, last week, we broke through $2,400. We'll soon see if we've set a new floor, but it's coming. With multiple interest rate cuts on tap for later this year and next, I expect the price floor to keep rising. And just as we've seen over the last 5 years, to accelerate the pace. Why is this pattern of consecutive higher price floors important? Because it builds confidence that the rally reflects real fundamentals underlying the trend, that it's not just a speculative bubble vulnerable to a sudden shift in temperament. And we know what those fundamentals are, that they're here to stay for the foreseeable future. Falling inflation and interest rates, massive gold purchases by central banks, economic and financial uncertainty in China driving tremendous demand from Chinese buyers, political uncertainty and instability here in Europe and elsewhere, and growing fear of war in Europe, the Middle East, the South China Sea, and the Korean Peninsula. This is a unique environment for owners of gold, one where they can benefit from price appreciation with good economic news, while protecting themselves with wealth insurance against the sea of troubles that seem to surround us.